have come here to chew bubblegum and kick ass, and I'm all out of bubblegum.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name is Robert Whitelaw, and I am the Rebel Broker, licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. I hope things are going well for everyone. I ended up taking all of last week off. It was sort of a me week. We're at that time of year, for me anyway, where I'm kind of close to my birthday, so I decided to take some time off for that. Did some totally not real estate related things. Just some, hobby fun stuff. I feel rejuvenated. I hope you do too. I hope the weekend was enough for everyone. I've got a couple of interesting little tidbits that have bounced around in my head in terms of ways to make our relationship a little bit more interesting. I've found some new ways to sort of thank you all for being a member of the audience, particularly for those folks who joined the Rebel Underground. For those of you who don't know what the Rebel Underground is, it is a group of folks who do not get pestered. I think that's the first thing that they would claim. It is the intention of that group is to get exclusive content. So right now there's a video out for them to consume that gives you the step-by-steps on how to start from a huge metro area and drill down to a smaller area, working on another video that will then work on a specific property for analysis. But these are all things that I offer just to the Rebel Underground, and the best way to join the Rebel Underground is to text the word Rebel Broker, the number 44222. That's text the word Rebel Broker to the number 44222, or you can go to therebelbroker.com. And you can click in the show notes for just about any show, there's a link to join the Rebel Underground. You can do it that way as well. So two very easy ways to join. But I've got sort of a new thing I'm going to be doing. And just to kind of keep things interesting, I'm not going to share the details of it yet, but it's going to be something that'll be sort of an ongoing reward. So right now, one of the things that I do is once a month, I hand out a $50 Amazon gift card to folks who fill out a survey for me. It's also at therebelbroker.com. At the top of the page, take a survey to support the show. That's the way to get your name in for the $50 Amazon gift card. And in addition to that, I want to make a kind of a fun thing for folks who join the Rebel Underground. So it won't be quite that, but it'll be something similar. So if you'd like to join the Rebel Underground, head on over to the website to do that, or text the word Rebel Broker, the number 44222. And of course, if you do go to the website, you can also reach out to me, send along any ideas, suggestions, whatever might be bouncing around in your head. Simply click contact in the menu bar, and you will get a way to reach out to me. And I'm looking forward to hearing from all of you. All right, so today is interesting. There's obviously I've got tons of source material since we haven't talked in over a week, but one of the more interesting ones, and one that I think can potentially help guide people in their investment strategy, particularly for flippers. This is going to be something that I think is aimed squarely at folks who are thinking about flipping or in the middle of a flip. One of the things that is always critical to keep just your finger on the pulse of is what's in the most demand but has the least supply, right? In terms of homes that you're providing, what you're putting out there in the marketplace. And what's really interesting is the folks over at CNBC have noted a very interesting trend relating to homes in certain price ranges that I think potentially spells an opportunity for investors to, if let's say, and I'm not sure this would be something I'd suggest you do if you're a new person to this, right? Although if this is where the largest number of people are going for the largest amount of satisfaction in terms of what they're trying to achieve, great, do that. But the problem is typically these types of properties, more higher end properties, require a more substantial investment on the front end. Right. And that's the nature of the beast. You're buying something, you're improving it, and then you're selling it for a whole lot more than you would perhaps with some other style properties. But in order to make that greater reward, you have to usually come up with more in the front end. And normally in situations like that, if you're relatively new, that means using other people's money. And if this is a first-time deal for you, that could be a difficult thing to do because I know getting money, one of the first questions is how many deals have you already done, those types of things. But I want to make everyone aware of this because I think it's absolutely one of those trends that could spell a huge opportunity for folks who are either about to acquire or have already acquired and are trying to figure out exactly how far they want to go with their renovation. Two big bullet points out of this article. The first one is the top 5% of homes by price sold in the third quarter saw their values increase almost 5%, 4.9% compared with a year ago, hitting an average of 1.71 million. Now that's according to Redfin. So some of the biggest growth we've been seeing is in these high-end properties. But what's also interesting is the number of homes for sale priced at or above 1 million just fell over 18% compared with the same period last year. And that's a drop that is not because people aren't buying them, right? Because we're still continuing to see their prices rise. That tells you that the supply is low. There are folks that are in that luxury price range, and we're defining luxury as over $1 million. That's going to be very true in some communities where if you're paying over $1 million for a home, it's probably amazing, right? Probably acres, probably humongous houses. In some areas, not so much. Average prices for homes in many of the areas that I serve are over $1 million, and these are not luxury homes. So it's going to depend. You need to calibrate yourself to this. But the demand for higher end homes is up there. Going along with this number is also the latest numbers that, new construction is selling at ridiculous paces. Well, of course it is, because it's the only thing people can get. We're still seeing supply low, prices high. People want to complain about not enough loans being underwritten. Well, that's because there's not enough homes to buy. So then there's a lot of weird articles. You're going to see a bunch. The big take homes are demand continues to be high, but right now even higher at the higher end, and supply continues to be too low. And we are continuing to see people paying 20 to 30% above what a similarly priced pre-owned home would go for in similar markets. So the dynamics right now are nuts and absolutely feed the beast when it comes to a strategy like buy and flip. I think, and what's really nuts is I don't necessarily think, because I know my advice all along has been don't bother with these crazy areas like San Francisco, San Jose, and areas like that. But, if you find something that's there was a home that was burned out that was for sale. And I can't remember where it was. It might have been downtown San Jose or downtown San Francisco. I can't recall where. But it was listed for over $800,000, which sounds insane. But when you realize you could buy that for $800,000 and then sell it for $1.6 million, you realize, well, it's a question of scale, right? It's a question of what you can do. What's the potential value of that property? So given what we're seeing in terms of numbers, I thought it would be good to sort of do a brief, just checklist of things to keep in mind if you want to do this. Let's say you've already got some experience, or let's say you've got a property right now and you've been trying to decide what direction to go with it. Don't let this data alone make you decide you're going to turn this house into a $1.2 million house that you just purchased for $600,000. Why? Because if you are the only home over $1 million in this neighborhood, you're not in a good position. Your goal would be to purchase a home in an area where if you were to bring it up, if you were to do that flip, you wouldn't be priced way out of what the typical market is for that neighborhood. You'd still be within a reasonable range of what that neighborhood is potentially worth. So it's not just about the property, it's about the property's location that's going to play into this. Now, if you've purchased a home and you've seen some homes in the past that have managed to pull that off, they've purchased and been remodeled and managed to sell for over $1 million or at a more luxury level, if it's very clear to you that the neighborhood you're in is already heading towards upward mobility, it's already moving in that direction, absolutely fine for you to help define that market by offering a property that fits the bill in terms of luxury. But absolutely do your groundwork. Don't just assume you can buy a property anywhere and turn that thing into $1 million property simply by investing lots of money into it. It's not going to happen if there's a crack house across the street and gang fights happening on your driveway every other night. So just make sure to keep in mind of what's really going on with the various markets in your area and where you're investing. Now, the article also goes on to discuss supply shortage. And this is great. At least we're starting to see, and we have for a while now, seen folks get that it's all about supply. There are still some folks out there pushing that the solution is to revamp financing. We need to make more money available. That is not the solution to the problem. That is going to make the problem worse. But at least we get folks who, instead of being at the end of a story where they might in passing mention supply, we're getting that first paragraph, first sentence is mentioning shortage of units. So, and as this article starts, the headline is luxury homes can't keep up with high demand. And this is from CNBC. We'll have a link to this story in the show notes for today's show. But the first paragraph, or the first sentence, the supply shortage that has been plaguing the nation's housing market for the past 2 years has now affected the most expensive homes. So great, and you still see some folks claiming that the solution to this problem is, as I said before, revamping of financing. Totally not. You need to revamp how homes are getting built, because clearly it's not the path to get that done isn't what it needs to be in order to satisfy demand. But the number of homes, the $1 million homes listing or homes for sale has suddenly dropped. The higher prices are the result of a sharp decline in listings in the luxury sector. The number of homes for sale priced at or above 1 million fell just over 18% compared with the same period last year. So this represents a unique opportunity, something where if these numbers are similar in your area, and what I would do is try to take these national numbers and make them relevant to you locally. And I know I'm a little bit more plugged in with my local market, so I happen to know that is true here in Morgan Hill, where I live. It's not as dominant as it is in some other areas. It's not the 18% drop in terms of number of listings. And it's very normal for this time of year for listings to drop, but we have seen a greater drop in luxury listings here than in other areas. So since I'm looking at my plans relating to this market, that's something that I keep in mind. Do the same with whoever your real estate professional is. Now, this is a little easier for a real estate agent to do with you since they have access to better historical data, easier to filter historical data so that you can really drill down to a little bit more of a level of exactness in terms of what you're looking at. Sites like Redfin's, Trulia, Zillow are really more designed for general consumption of data, right? And oftentimes you'll find that the comparables that they're comparing aren't really appropriate. So always try to work with a professional who can help tailor your search so that you're seeing what really is relevant for what you're trying to accomplish. All right. The article goes on to say that given the high demand, supplies will likely continue to fall. Home builders are turning their attention to the lower end of the market where demand has been rising for years and where the lack of supply is acute. The average price for non-luxury homes was $336,000 in the third quarter, up 5.3% compared with a year earlier. So this is also good news because what we need is for manufacturers to turn more towards the lower end. But it also means in some markets that might again emphasize the advantage for you as a flipper, since you wouldn't get as much competition from what might have been going on from these developers who, if in a previous year would have been building luxury homes, now they're tending to not, or at least they're building fewer of them. So it really represents an opportunity for folks who are potentially looking at getting the biggest bang for their bucks on their fix and flip. Luxury homes are also selling faster, although not as fast as the rest of the market. Luxury homes in the third quarter sold on an average of 70 days, 4 days faster than a year ago. Non-luxury homes sold on an average of 53 days, a full week faster than last year. Now, in my local marketplace, so if I go, and any realtor you work with should be able to pull these kinds of numbers out for you. Every MLS can be different. The services, the software that's used can vary from region to region. But I know most do basically the same things in terms of being able to filter. Now, in my case, the average price in September of 2017 in my marketplace, in my local area, was just over $1 million, $1,007,000. And the average days on market was 28 days, which is actually up a day or two from last month. In August, it was 26 days, and this month it was 28 days. But in that time frame, we saw average home prices dramatically jump from $942,000 to just over $1 million. And it's sort of been bouncing just below and just above over $1 million over the last 12 months. Was sort of an interesting peak. Now, also keep in mind the volume of transactions that are going on. Now I'm looking at my entire city, and over the course of the entire year, there's only been 530 properties that fall into this category of being single-family residential homes. But this is good data for you. This is data you're going to want to take a look at. And you can also drill down even further and search just on price ranges and get a view of, at various price ranges, how many days did it take for each one of those to get sold. And one interesting way to go here is to go with the days to sell, the average sales price, and then group it by price. And you can see how this is panning out in terms of what is the effect of price on the days to sell. I think that's a good thing to know in your particular market. And depending on the size of your market, you may need to broaden it in order to get really good data. You may find that there's only one property that fits the highest end, for instance, which would give you obviously a sample size of one, and that's really not what you want. Now, I'll include a screenshot of my county just so you can kind of see what I see. But there's interesting data to pull out of this because you can see, because one of the things that's always worrisome for someone who is doing a fix and flip is, I don't want to hold on to this. The holding costs of this are a bad thing. I don't want it to be 2, 3, 4, 5, 6 months in order for me to get this sold. And for a lot of investors at the luxury end, that's always been a concern. Historically, it has often taken a very long time, or at least compared to more reasonably priced homes, a very long time to get these properties sold. Nothing is better than grouping this data in terms of sales price and then looking at sales price and days to sell to really get a visual representation of where does that start to happen? At what price do you start to see these things make these jumps so that you know to avoid certain areas? So take a look at the table on the show notes for today's show. It's average days on market and sales to list price ratio. So take a look at that and you'll see it's a U-shaped bar in terms of the days on market. That's kind of interesting, right? You wouldn't have guessed that at the extreme low end that you see a big jump in the number of days it takes for some of these properties to get sold. And this is not a phenomenon that's related to sample size, as I mentioned before, because if I do the whole county, there's over 11,000 single family listings that fall into this category. So we're getting good data. So the chart is a reliable one. Now, this chart is probably going to look relatively similar to what you're going to see in your marketplace. But here's the key difference. Here's the magic. Well, at least I'll share with you the magic in just a minute. So don't go away. We'll be right back when I share the magic. So don't go away. Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner-broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909. Welcome back, everyone. That was a cheap shot, I know, to share the magic. So when we left off, we were talking about this U shape you tend to get in terms of the days on market when you plot sales price versus days on market. And it's the relationship between these two things. You'll be able to see it a little bit more clearly. The x-axis is the price, or the ranges of prices. So at the extreme left, you're seeing anything 0 to 200,000, of which there were none. Anything from 200 to 400,000, anything from 400. So it breaks it up like that, and then plots on a line the days on market for each one of those price segments. Ridiculously valuable information for any flipper. Why? Because it's going to tell you exactly when to expect you to start seeing more resistance to getting your home sold fast once you break a certain price. Now, here's what's great about this chart. Your chart is likely to look very similar to mine in terms of its shape, right? You'll start to, in my marketplace, you'll see the biggest number of homes, kind of bulging in the middle, or in terms of the bulge representing, boy, I'm starting off poorly. You'll see the gradual building in prices, and it may not get to where mine is. Now, the top price that we see here, the top price range, the 5 million plus range, is a $6.5 million property. Now, according to this, that property sold in how many days? 50 days? 52 days. But you can look at this chart and say, okay, there's clearly a point at which the number of days starts to skyrocket, starts to jump. Now, in my marketplace, that magic number is right around $2 million to $2.5 million. I can see that pretty easily. When you go to the website, therebelbroker.com, check out the show notes, look at this picture, you'll see what I'm talking about. All right, so you should get the same general shape, and your numbers will simply be different, but you'll learn the same thing. In my case, 2 million to 2.5 million is that magic place where I am starting to, and granted, and then of course, you're going to want to, this is for an entire county. You're going to want to temper this with more localized data, but I wanted to make sure to have enough data here so you can sort of see what I'm talking about. And it's also good to know in general, the larger area surrounding your property, what is going on there in general, right? Because also you want to identify these various areas where we're seeing more robust action, where homes are selling faster, and find great opportunities in those markets, right? In any event, you'll be able to see when you run these numbers in your local market, you'll see what that barrier is. What is that price at which homes start to stay on the market longer? Now, my suggestion to my investors who do flipping is stay below that point. If you see that the absolute max is $2.4 million, $2.5 million, or $2 to $2.5 million, don't ever do a property that's above that. Now, there are a lot of other reasons why you might want to stay out of that level. It simply maybe price is impossible. Clearly, I mean, I've seen folks in the past do purchases of $1.2 million and turn it into a $2.1 million home that sells. I've seen folks do $800,000 investments into a property that they flip that turns into a $1.3 million, $1.4 million home. So big money can be made here, but it also requires big investment. What you might want to do is take a look at this as a guide and try to figure out, where do I make my move, where am I going to play when it's done? So this is a factor you're going to want to think about, not so much when you're purchasing, but more when you're considering what will I project the property to be worth when I'm done? Where is that magic number? Now, for me, the magic number is nuts, right? The magic number is up near $2 million, and that's insane. For you, in your marketplace, and as you drill down to a smaller and smaller area, you're likely going to identify numbers that are more rational because I live in an irrational place. Now, I also want to refer you back to therebelbroker.com to check out the show notes for a second image I'm going to include, which covers the area I tend to service more, the Morgan Hill, San Martin, Gilroy area. And because it demonstrates an interesting thing that I've brought up before, the idea of price banding. Now, this is that when you look at the days on market number for that area, it is different from Santa Clara County. Absolutely. It's less you-like, and also at the higher end, at that $2 to $3 million zone, shows what I've talked about before in terms of price banding, where you'll see a big jump in the number of days it takes to get a home sold in this one price band, and then it jumps right back down in another price band. Now, this is a very dramatic jump, and my feeling is if I look more into this data, I'm going to find that it relates to a single sale, that there was some because in this particular search, I'm only seeing 1,300 homes, 1,300 homes over the entire 12 months. So something to keep in mind is always sample size. And when you see something that just jumps way out of whack, you're going to want to do a little bit more research with your real estate agent to see if you can't figure out what's at the heart of that. If you go and it's a true representation, happened with multiple homes in that price point, you've got good data that you can make good decisions on. But in this case, less of a U. It does still tend to see an uptick in the number of days at the low end, but not nearly as much as we saw in Santa Clara County. But again, all good data that you can pull out of yours. Now, the numbers in your area are likely to be different, but all good things to know because you'll know where you'll want to cut things off. Now, at what point did we see? Now, we have much bigger numbers here. You'll notice that on the example of Santa Clara County, in general, because remember, this is a sub area within Santa Clara County. And that's one reason why I also wanted to pick it, because it really demonstrates how a smaller market within a larger market can be completely different. What we're seeing here is a point at which things tend to go nuts at a lower price. This is a community where prices tend to be lower. So, and also the days on market are more insane. Now that peak market time of it looks like about 240 days in the $2 million to $3 million range, let's see if I can pull up what that actual number is. 235 days it took for that home to get sold. And remember, this is modern numbers. This isn't old numbers from the good old days or the bad old days. So there's still markets out there where these higher end homes can really stay on the market forever. What we're seeing in these markets is properties taking closer to 50 days to get sold. Now, we've already talked specifically about my area of Morgan Hill. In Morgan Hill specifically, it's still less than 30 days for everything to get sold. In the county in general, it's still relatively low. But in this sub-market, this can not only calibrate you to what your expectations should be to get your home sold wherever you are priced, but then can also give you guidance on what your topmost pricing should be if you're concerned about holding on to those properties longer. So I hope this has been valuable stuff. This has been a little bit more of a wonky get these numbers style show. Of course, as I said, I've got screenshots of these images with data on what they are, what the data is that makes them up. If you're not really sure what the heck I'm talking about after looking at these charts, show these to your real estate person. Say, hey, listen, I really want to calibrate myself to what I'm setting myself up for in terms of how long it's going to take to get these properties sold. And start using these kind of charts to inform yourself. And when you get news like we just did of a market indicator that the luxury level in your particular marketplace is getting a lot more attention, figure out where that number is. Now, in my marketplace, in the Gilroy, San Martin, Morgan Hill area, right about 1.1, 1.2 million. I guess you could also make the push up to 1.3 possibly as the barrier between luxury and not luxury. In your home, in your local area, that might be $700,000. That might be $600,000 is where luxury starts, where the luxury market starts. And a lot of that's going to be up to you to decide, to figure out. But note now that the numbers we just talked about are million plus. They were taking national numbers. So see if you can't figure out how you can make these numbers work for you and make your next investment that much more lucrative by A, knowing the numbers, and B, knowing that there's a shortage of supply for luxury homes at the million plus level. All right, folks. Thanks for listening. Do appreciate you taking the time out to listen to what I have to say on these subjects. The goal is to always leave you with way more value in your hands than time invested in listening to the show, and I truly hope we've accomplished that today. Thanks for listening, everybody. I'll talk to y'all next time.